Alrighty, good morning traders. This is Blake Morrow and you are listening to the FACE webinar. I am stepping in for Dale Pinkert. Let's see if you guys can see my charts here. Okay, yeah, you should be able to see the euro dollar. So I got a couple of announcements. I actually I've been up since 1 o'clock this morning. I had to go get my my sister's dog at 1 a.m. because she has gone to the hospital to give birth to her first baby boy, which is really exciting news. It's exciting because this is my first nephew in my bloodline. My wife has a couple of nephews, and you know I've known those kids since they were little in diaper kids. Now they're in college, but I'm really excited because my sister's she's nearly 10 years younger than me, so so it's exciting for me to finally be an uncle. And so today, if I sound a little tired, it's because I've been up since it's 5 o'clock in the morning here. You can see it's 5 a.m. I've been up since 1:15. So later today, I'm going to be a little tired. And if you guys are ForexAnalytix subscribers, the updates throughout the course of the day may be a little sporadic, just because I am I probably will be heading to the hospital at some point today. And even though we have other team members, or most people are out. Steve is in Port de Healy. Stelios has some internet issues. It's summertime in the UK with Amanda. Joe had to go out to New Hampshire because it's his wife's birthday today. So it's like everything's happening at once. So if you guys are ForexAnalytix subscribers, try to be a little bit more lenient with us today, as everything seems to be coming to a head at once. So I just wanted to announce that to you guys. And you know, Ziggy just said congratulations, uncle, and happy birthday. It is my birthday today. So not only is it my birthday today, but it is also the greatest birthday gift I can possibly have is seeing my brand new nephew happen today. So it's really cool stuff. Thanks, guys. Thanks for all the birthday wishes, those of you that are writing in right now. So it's a big deal. It's a really big deal today. What I was really looking forward to mostly today was going out to dinner to eat P.F. Chang's tonight, but I don't know if that's gonna happen. It's like one of my favorite restaurants, by the way. Just I love P.F. Chang's. Well, go figure, because I'm half Chinese, right? Anyway, all right. I had to get all that news out of the way. I really need to get started with the analysis today, because I have a lot to say and I have a lot to talk about. So first of all, let me grab my bias chart here. Where in the heck is my bias chart? There it is. So, you know, you guys for long, those of you that are longtime listeners of these webinars and the Morning Edge specifically, if you guys listen to the Morning Edge for the 15 years basically, or 14 years I was broadcasting on the Morning Edge, or even any portion of that, you probably remember I used to have rants. I used to rant a little bit. Sometimes I'd get on in the morning and I have something to say. Well, I do have something to say today, and it is a little bit of a rant regarding the peso and regarding the NAFTA negotiations and what's happening. So let me first and foremost say that President Trump really was dealt a very tough hand yesterday when two of his closest confidants are basically going to jail. Paul Manafort and Michael Cohen both going to jail, and especially, you know, the Manafort was expected. The Michael Cohen and the comments that have come out from his attorney regarding you know, all the hush money payments that you know, Donald Trump has made, and you know, trying to tilt the elections. You know, those are really tough comments, and they're going to weigh heavily on you know, the Trump administration. You know, what happens moving forward, I really don't know, and I'm not a political expert by any stretch of the means, so I'm not here to, you know, to talk about that, because I really have no idea. I mean, I've read, you know, probably, you know, as much or as little as you have, but you know, I'm not going to sit here and try to make an assessment on what I think is going to happen. But what I can tell you about the peso and about the Canadian dollar in the NAFTA negotiations is this. You know, last night, you know, because I was watching all this unfold, and I was watching the equity markets come under pressure, and then the equity markets started to bounce because the Trump administration announced that we should expect a handshake deal regarding NAFTA on Thursday, so that would be tomorrow. Now, Canada, you know, shortly thereafter, and by the way, if you want to know what turned the S&P last night, that was it. I was watching. So right here, when that NAFTA news came out, this is, you know, this is what happened. You know, we saw this reversal. We saw this reversal happen in, you know, here you can take the hourly chart. Saw the reversal happen here right when that NAFTA news came out, and that turned equities, and it was a smart move at the time regarding the Trump administration, because what I feel that they were trying to do is divert the attention from what was happening in, you know, with Paul Manafort and Michael Cohen and everything else, and they you know, announced, hey, you know, let's divert attention. We might get a NAFTA deal. Now, the only reason why I'm saying that is because the comments that came from Canada and Mexico following that were here. You can let's go over to live stream. Let's go all the way back down to last night. U.S. to announce handshake Mexico NAFTA deal. That was 10 hours ago. 2 hours later, Canada government says to have no notice of any NAFTA deal imminent. At the same time, Mexico says still working to resolve NAFTA differences, said to deny existence of NAFTA handshake deal with the U.S. That was all 8 hours ago. So 2 hours after the fact, Canada and Mexico, you know, they basically say, hey, well, I don't know what you're talking about, right? Like, but sounds great, but, you know, I had no idea. Now, the reason why that's a big deal, in my opinion, is because if NAFTA, or excuse me, if Mexico and Canada want to play hardball, and I tweeted about this an hour ago, if they want to play hardball, this is the time they're going to do it, because they know that the Trump administration is at a disadvantage at this point. It's very obvious to me, maybe I'm the only person here, but it's pretty obvious that they're just trying to, hey, we need a win. You know, we need a win. Let's get this NAFTA deal done, so this way we can say, you know, as the midterm elections are coming up here in the next few weeks, hey, you know, we got the NAFTA deal done, and try to, you know, save votes. Well, if I was Mexico and Canada, I'd be like, especially after all the trash talking that the U.S. has done over the last, you know, year and a half, I would, if I was Mexico and Canada, and look, I'm an American, all right? I actually want to see these trade deals get done. I'm just talking from a, you know, just from a, you know, just from an outsider looking in. If I was Canada and Mexico, I'd turn around and say, screw you, man. You know, let's try to get a better deal. That's what I would do if I was Mexico and Canada. The reason why I'm pointing this out is because you saw the U.S. dollar Mexican peso buckle. It buckled last night when that came out. You can see it right here. Let me go ahead and grab a pen. You can see right here, you know, it buckled underneath that, and then when Mexico turned around and basically, you know, denied it, it rallied back. Now, you know, the peso is obviously just kind of jostling around these levels, but look, I think the risk is that, you know, over the next couple of days, Mexico and Canada say, yeah, that sounds great, your handshake deal, but we want something better. And if that happens, then, you know, the dollar Mexican peso is going to rip. And that, I think, is the risk. Now, I tried buying it this morning. I actually made a little bit of money just on a little bounce. And I got out of it because I'm more worried about the dollar getting smoked this morning. I mean, you got the euro dollar, which is approaching really key resistance, which I'll talk about here in a second. But the dollar looks like it might continue to get just rocked this morning. So I didn't want to be long the dollar just in case we start to see the euro really start to push above this resistance. But I wanted to point that out because I think that is the risk right now with the US dollar, Mexican peso, and with the Canadian dollar too. I say the Canadian dollar too because Canada may be you know, not part of the, might not be part of the, you know, negotiating process right now at this moment between Mexico and the U.S. But if I was Canada, I would, you know, step in and say, yeah, that doesn't, you know, it's not right for us either, and then try to negotiate something even better for Canada. You know, knowing that the Trump administration is probably going to bow down to some additional measures because of the situation that they find themselves in because of yesterday. Anyway, so those are just some thoughts I had regarding what's happening with NAFTA. Now, am I trading the US dollar, Mexican peso, or the Canadian right now? No, I'm not. But I wanted to point that out because I think that is a potential risk in the market currently. And you know, that's also going to be a risk to equities too. Just, you know, FYI, because if Canada and Mexico, you know, take a step back and say, you know, we're not ready to finalize anything, we're not in any rush to do any handshake deal right now. We still have a lot of issues to cover. The stock market could come under pressure too as a result, because the stock market is really hoping and anticipating a NAFTA deal gets done. So anyway, hey Stelios, I just heard kids, so welcome back.
Hello, I'm back from Venezuela, you know.
Okay. Yeah, I heard Greece is going by the way of Venezuela over there without any power, so yeah, congratulations. Yeah. you should move back to London. Okay, hey, I'm going to start on the analysis and let me hammer out all these majors really quick, and then and we do have core retail sales today in Canada, speaking of which. So let me get through some of these majors, and then I'll bring you back in so we can talk a little bit about this NAFTA thing that is happening. Okay, so let's go with the euro dollar. So the euro dollar, obviously, right now, key resistance comes in right here. This is, I can't express to you guys enough how important this resistance is right here, and it comes in at 116.30. Because if we break above that, think about all the people that are like, there's no friggin' way the euro dollar is going above that 16.30. I'm going to short the hell out of it right here. If that thing breaks, we're going to see 116.50 really fast. So 116.30. I'm going to have to write down both 116.30, which is it is a key level resistance, but I can't fit it all in here. So oh yeah, maybe I can. 16, and if I put an asterisk, that's because I think it is key. Right now, we're in a range, but we're threatening to go bullish. You know, we've gone from bearish to almost bullish really quickly, based on this dollar reversal here. Now, support for the euro dollar is, in my opinion, and guys, try to follow along quickly. I'm sorry, I'm moving fast, but you know, time's an issue this morning. So 115.45 is now support. And by the way, I did not, let me reiterate, I did not expect the dollar weakness that we saw yesterday. I mean, obviously the Cohen news is what really, you know, people sold the dollar pretty aggressively because they are fearful that Michael Cohen has something pretty dirty on President Trump, and that's why the dollar has really been under pressure. That's what really caused that whole disaster. Okay, now take a look at the cable. I just tweeted out a chart too regarding this major trend line right here. I'm going to tell you guys, if the pound breaks these highs, you can try shorting it right now, but you know, I sent that out more as a warning because gold looks pretty bullish. If the pound breaks 129.30, it's going to see 130 fast. 129.30. This is really key resistance. I put 2 asterisks there because I think it's so key. Look, we're gonna flip from bearish to bullish really quickly. Like by the time we talk tomorrow, if we're trading up here, I'm gonna be putting that as bullish. That's how important this support is. Now, or resistance, excuse me. Now, any move back down to 128.26 should be very well supported for the cable. 128.20. I'll just write 28.25 just to round that out. All right, Aussie. Aussie, you know, it completed its inverted head and shoulder pattern. So, hey guys, this is pretty easy stuff right here. If you're short Aussies, you don't want to see it above 73.80, because if it breaks above 73.80, it's going to break out. And I'll tell you, Barclays had this as its short trade of the week. I was long, so, and they put it as their short trade of the week over the weekend. Thank God I was long, because it, you know, went up. Okay, so now 73.30 is support. Again, I'm trying to move quickly, guys, so just bear with me. Kiwi. The strong retail sales out of New Zealand last night. Strong retail sales. Okay, and I was short the New Zealand yen. I actually closed most of it out this morning, but I might reopen it again later today. Depends if the dollar yen breaks below 110. But I'll tell you what, the Kiwi dollar breaks above 67.20, and we are gone. 67.20. I mean, look, guys, 73.80, 67.20, 129.30, 116.30. Look, we're really close to resistance levels on all of these pairs, and we are really going to threaten. The dollar could really get demolished here. I mean, I'm not exaggerating, and we'll talk about the DXY here in a second. Support is at 66.75. 66.70, because obviously we have to talk about gold when we talk about all this. Canadian, I don't know what to do with the Canadian. We are in the middle of this channel right now. Like, look, we are smack dab in the middle of the channel. There's the bottom of the channel. Here's the top of the channel. And we are here. So you guys have fun trading the dollar Canadian. I don't know what to do with it. So 131. That's 130. Okay. You guys can figure that out. You figure it out. I'm not trading it. 130, 131 range. Dollar Swiss. This is where the dollar is getting demolished. We broke that wedge. This is a wedge, by the way. Big wedge too. This one, see it? Big wedge. Big wedge. Broke lower. So I mean, you could arguably say that its initial target is going to 96.50. So, okay, gosh dang it. Yes, stop, for crying out loud. Gold's breaking out. Dude, I shut it up. I already shut it up. My alarm's still going off. But look at gold. It's going to squeeze the bejesus out of everybody. So, you know, it's funny. I tweeted that thing. I tweeted out about gold today, and I got all these people. And I was telling the chat room, the guys and gals in the chat room, these guys, hey guys, you can, you know, I was telling all these guys, in the chat room earlier. I'm like, look, right here, Summers said, people keep saying, by the way, that gold chart, people keep saying that is a great short. And that's the problem with gold shorts. They forget that the capitulation in Asian trade last week, because we capitulated here, that means we're going to break out higher. So you don't want to be short gold. And I had all these people that were writing back to me today saying, oh, you know, gold looks like a great short when I tweeted that chart out. I'm like, yeah, well, good luck with that. You know, you guys, good luck shorting gold after squeezing out like that in Asia. If you don't want to be short gold, I'm actually long gold, by the way. Most people know that. I've been buying it I bought it again yesterday. I bought it last week, sold it yesterday, rebought it again yesterday, basically at the same price, and I'm long. So so anyway, it's cruising higher. I did close the pattern in play, but I'm still playing it on the long side, and it's going to squeeze the hell out of everybody. And this is one of the things that's going to weigh on the dollar. Okay, sorry, going back to the Swissy. So the Swissy, sorry, I'm getting sidetracked here. Swissy, but I had to talk about that regarding gold. Big support coming in at 97.85, where it looks like we're going to head right to it. 97.85, big support. Resistance now, any move back up towards 98.60. 98.60, and by the way, this is bearish now, just so you know. It is now bearish. Okay. Dollar peso. Support, 1875. Resistance, 1910. 1875, 1910, and this is key resistance, because if that breaks out, then we turn bullish. Okay. Remember, the whole NAFTA conversation we just had, that should be front and center in your mind. Norwegian krona getting destroyed now. We're right at the breakout point, that 833. We're right on support here. 833. Resistance should be at 840. Yep, 840 right there. 839. 839. Sorry guys, I'm moving fast. This is kind of almost as fast as I move when I'm not talking to you guys. Look at this. And by the way, Benedict in our chat room, I tweeted about this last week. What a great call on that butterfly. Kudos to you. Really, he's a pro. He's a bond trader over at a big bank, so I won't tell you which big bank because he probably doesn't want everybody to know. I know he doesn't want everybody to know, or not the general public anyway. He's in our chat room. So 904, 9.04, and then resistance will be any move back up towards 910. Actually, just 910, 910. We are in a range. Dollar yen. By the way, dollar yen stopped at the 200-day moving average yesterday to a T. So that means that 109.80 is really key support. Let's write that down. 109.80 is really key support. And resistance, if you guys did not see, we hit this downtrend line last night, so really resistance is at 109.50 or 110.50. 10.50 is resistance. We are in a range, and here's the risk with the dollar index. Okay, so let's talk about the dollar index. So the dollar index is going down to 94.70, in my opinion. Now, what's really going to kill the dollar? What's really going to kill the dollar here is if we break, because this will be those of you that have known me or followed me for years, you know I like to call it, you ever hear me use the term or the phrase, the middle finger pattern. You guys ever hear me call, you ever say the middle finger pattern? Let's see. This would be the middle finger pattern. This one right here, the middle finger pattern. Yeah, the middle finger pattern is basically the false breakout. So you get the false breakout, middle finger, and then you break this, and you go straight down, right? That's the middle finger pattern. So the dollar index looks like it's going to give us the big old fat middle finger pattern. And dude, I'll tell you what, that's when the dollar bulls get smashed if we break through that support. Smashed. All right, so let's write down the support here. Let me get rid of that. We're below the 618 of this move. So that means the 78% retracement is going to be really important. That comes in at 94.70. 94.70, really key support. Now, anybody who's long the dollar, they just want out. So any move back up to 95.50, it's resistance now. 95.50. We are in a range, but we break through that support, and it's all over but the crying. Okay, your bias chart is finished. Stelios, are you here? Steve, are you here?
I am here, Uncle Blake. Is it uncle or aunt? You don't know if it's going to be a boy or a girl. I'm kidding. I'm kidding.
Oh my God, I was about ready to smack you. How's it going, man?
That's a line from Friends. Anyway, I'm good. I'm good. How are you?
Good. Just tired. I'm really tired. We have Canadian retail sales coming up here in a second, and we should watch the Canadian when that comes out. But hey, Steve, are you there?
Hey, mate, I'm here.
Hey, how's it going, Steve?
I'm good. I'm good. So your sister decided to give you the best birthday present, right?
The best birthday present ever. So,
don't ask for the same next year, though. That's going to be kind of tough.
No, yeah. No, I think that'd be a little bit of a rush. I might ask for 2 years from now, birthday gift. But yeah, so it's pretty exciting. You know, they're in the hospital right now. She actually just got her bed like an hour ago. So she's her water's broke. Yeah, it's
Great.
Within the next I would assume within the next 6 hours or so. So yep.
Cool.
I'm pretty excited. Okay, so hey, we got Canadian retail sales coming out. We have we're expected a miss on retail sales, but the dollar Canadian, you can see the dollar is already strengthening against the Canadian as a result. Let's bring down this right here. Yeah, you'll see it populate right here. Negative 0.2% is what the market is looking for. Stripped out core minus autos, negative 0.1. So let's see what we get. I really don't know how to trade the Canadian, like I said, and I don't know if you guys heard. Did you hear my comments regarding NAFTA?
Yep.
I didn't because I was still without power, but yeah.
So Steve, you heard it, and I really think that that the U.S. was basically just throwing out the, hey, we're going to have a handshake deal on Thursday just to get some sort of good news. And you can see the dollar Mexican peso is it's actually bidding up a little bit here. And I think the risk is, Mexico and Canada step away from the table, from the negotiating table, and say, hey, we're gonna hold out for a better deal, because the Trump administration is, for all intents and purposes, a little bit weaker position right now, right? After all the news yesterday. So anyway, that's.
Sure.
But what does that do to the Canadian? I think the Canadian's at risk of hitting 131. We get a weak retail sales number here. We might scream up towards 131 today. Possible.
Here's the MXN looks like a very nice ABC likely pattern, which means that we're now seeing some consolidation, and I would expect
numbers were in line, by the way. Numbers were in line.
Yeah, exactly in line, actually. Yeah.
So the dollar CAD came under a little bit of pressure here.
We have some better revisions, though, from what I say.
Oh yeah, yeah. It looks like revisions were better. So that's causing that Canadian strength. I wouldn't want to buy the dollar right now based on what the euro and the pound are doing currently, and I'm sure you guys have seen. I mean, you got gold. By the way, Stelios, silver looks like it could rip higher too. I think up to 115, but gold really looks like it's going to squeeze. You know, we're above 1200 now, and gold looks like, you know, we're heading up to you know, 1205, and above 1205 things get a little squeezy, like really squeezy.
I agree with you. I think above 1206, actually the resistance I'm watching is 1206, but yeah, like a tiny difference. I think that we're going to be seeing 1235 above that.
Yeah, guys, I think the main thing is going to be the FOMC, obviously, but this FOMC, the minutes is from last month, so I don't think we're going to get much, but the main one is going to be next month. You know, when all the first of all, the market's pricing in a hike pretty much completely, and we're going to get guidance, and we have to remember that the base case scenario is 2 more hikes for this year. The market's not pricing completely 2 more hikes, but it's almost there. So I think that's a risk, at risk, sorry, especially given what's happening with Trump and all that. I don't know. I really don't know. I feel a bit nervous about the dollar.
I would be too. I mean, look, the dollar was sold aggressively yesterday following the Cohen news. It was, like I said, it wasn't the Manafort news. Everybody expected that, but for his, you know, his fixer, his personal attorney to turn on him, and he has recordings of Trump. That's the one thing. Like, everybody's like, do you think he's, you know, he recorded any of that? He already has played. They already know that there's recordings of certain conversations he's had. So, you know, I think the dollar was sold really aggressively yesterday as a result. We don't know what we only know what we know, but the market right now is feeling uncertain about the dollar.
Yeah.
And you look at this euro. I mean, this euro is really at risk of breaking higher. Probably while we're sitting here talking, it's probably going to start breaking above this resistance. And I mean, you got gold breaking out. The euro's threatening, you know, and as I said just moments ago, you know, we break above this 116.30. We're going to push to 116.50 really quick. That's the 78% retracement, and possibly even further than that. I'm just you know, pointing out some obvious things. You know, we could actually see. Let's go over to the 88% retracement takes us to 116.96. Which, you know, is entirely possible here. So I think there's a risk of a continuation higher. Now, hey, Stelios, has there been any news on the Brexit front?
Not that I know of, no.
Okay, nothing.
Not today.
Okay, not today. Okay, so
I did read a stat. I don't know how accurate it is, but I did read the stat that the Britain's Forex volume is up 23% since 2016, which means, you know, in terms of activity, nothing's changed. You know, given we had the Brexit decision in 2016, obviously it's going to be effective as of next year in March. But in between, nothing. You know, it doesn't seem to have you know, done any damage so far in that respect. So I just thought that was interesting.
That is interesting. You know, I have to imagine the market's still pretty aggressively short the cable, and that's why I pointed out this chart earlier. Oh God, we're breaking it. So this is a major downtrend line here. It's cleaner on this chart. I actually did it on a different one here. Here's here Steve, are you there? Or I mean, Stelios, you there?
Yes, I'm here. I'm here. Yes.
I'm here, mate.
Okay, good deal.
Wow.
So you see this big downtrend line. Now this is from that big double top, and we are, you know, yes, you can go to the 4 hour and say, oh, but we're so overbought. Look, we can be overbought-er.
Yeah.
I mean, it's only 80, registering 80 on relative strength. You know, I've seen relative strength register in the high 80s. On most charts. So
plus that's exactly what you want to see, right? I mean, especially in short-term time frames, you want to see overbought levels to get confirmation that something is changing.
Right. And so this cable looks like it's going to squeeze the heck out of everybody, and not to mention that here. Let me just draw this out really quick. If you take the last where we had the higher high, higher low, and then it shifted. So this is also a 50% retracement, roughly. I'm gonna see right there, 50% retracement. So that gets taken out. You got some key fib levels that get taken out here at 129.30. We're almost there. And you know, we should trade to 130 really quick, maybe even to 131, quite possibly up to 132, just from a pure crappy positioning standpoint. And remember, everybody's long the dollar. Look, I tried to short the euro dollar yesterday because I did not, you know, it was pre news with the pre-Cohen news. I shorted the euro dollar yesterday at 115.57 average, and I got run over like a freight train. I ended up getting out of it at like 82, right? I mean, I got squeezed. But how many people were shorting the, you know, just buying the dollar? They were buying the dollar last week. They got caught off guard this week. Now they, oh, wow, the pound's gonna break. Look, here goes the cable.
Yeah, 129.30 almost. Yeah.
Yep. Squeeze City coming. So hold on really fast. Let me make some adjustments.
And this is ahead of the FOMC and Jackson Hole, where really, what hawkish commentary can we get from the last 2 weeks? I don't see it.
Right. I mean,
the most hawkish comments I think would be steady as she goes. You know, as we have been pricing for some time now. So, you know, it seems like a one-way bet at the moment.
Yeah, I think it is. So, you know, here goes the cable, just, you know, getting really close to pushing this 38% retracement envelope. Again, I think between the pound and the euro, you know, if they both break at the same time, it's going to bring in, you know, it's going to usher in some, you know, Aussie dollar buying, Kiwis getting close to breaking out. So a lot of big breakouts brewing, and setting up. The dollar Canadian could take out 130 and probably see 129.50, which would be near the channel lows. So yeah, a lot of big developments brewing here in the FX market. Hey, whoops, Steve, I'm going to turn it over to you if you have all your charts in front of you. You good?
Sure, Andy Blake, I'm here. Yeah.
All right. Hey, I'm going to pass it over to you because I'm going to send out a couple of ForexAnalytix updates here before I have to head to the hospital, I think.
Absolutely. We're going to be here anyhow. Don't worry about it.
Good luck, man. Good luck.
Thank you, and guys and gals, thank you guys for all of the birthday wishes, and you know, wishes for my family with the new baby on the way. And once again, you know, just I have to throw this out because they are our sponsor, and I truly love doing business with them. If you guys have not used or called Forest Park FX, make sure you do so. They are our webinar sponsor. They make sure that this webinar continues to happen for you guys free. So do us a favor and make sure you check them out, and Steve will show you how to do it. So, all right, guys, have a great one.
Absolutely. See you later, Blake. Bye-bye.
Thanks, Blake.
Thanks, guys.
So, Stelio, you're going to help me out with the questions after we cover a few things. You know, I already said yesterday that we're going to have a look at some of the yen pairs, because I know that Blake is covering now with the bias chart of the day all the majors, the USD majors and USD yen, to be honest. So I have a few charts I want to comment on. I want us also to have a look at the yen, at some of the yen pairs, and then some of the crosses, and then we can go over a few of the questions that our friends have. So, you know, I'm not going to cover again, obviously, euro, pound, etc. But before we go to the yen crosses, I want to show a couple of things. I know that Blake briefly showed them, but for me, USD NOK is quite interesting to watch, simply because if you look at the long-term picture, this is where we got rejected at the moment. If you see, there is a large channel right? So we have this trend line support, and if you draw a parallel to that, you see that we actually tested this before the USD NOK collapsed lower. So I do think that this was a very nice reversal from a very important resistance, and I do think that from a risk reward perspective, any rebound to 840 is probably a very nice shorting opportunity for at least another push lower, perhaps towards 825. So this is one pair that I'm monitoring. I think that as a short-term trade, it looks appealing. The other one I was looking for is USD SEK. I like the fact that USD SEK actually, first blew through this ascending wedge. So it was an overthrow essentially, and now it's breaking lower below it. I think that especially if it clears this previous high, roughly at 902, 903, then looking for a move towards 889 is at the very least, appealing. So USD SEK, in my opinion, it looks quite nice for a continuation lower. And the other one I'm looking, from personal perspective, is I'm looking for this consolidation in the USD MXN to be resolved in the upside. I think that at the very least that this is an A. This perhaps is a pennant that we're seeing here, and I already like very much today's candle, because today we were trading actually quite lower, and we've now completely reversed to be unchanged, despite US dollar showing weakness. So I would be, looking for a breakout from this pennant and another push above the previous high that was at 1940. So I would at least be looking towards 1960. I think this is also quite an appealing trade. So these are the things I'm looking. Besides the majors. So let's have a look at some of the yen pairs, because I think that some of them are actually at critical junctures and some of them are actually rebounding from very nice areas. So let's begin by having a look at the euro yen, because as you see here, I was viewing this as a pennant, and I was expecting it to break lower. I was even expecting, we had drawn this a long time ago while we were still moving higher. I was expecting that this 131, 70, 80 area is going to be a very tough resistance to crack, because it was a multiple confluence of resistances. It worked like a charm. We then broke lower. And once we cleared actually the horizontal support area at 128.70, the next target was a retest of this horizontal support area at 125.50. We actually made it there, but are actually rebounding once again from there. To be honest, I was expecting that we would clear that zone as well and push lower towards at least the next area, which is at 122.80. Regardless, what remains the case here is that 128.50 should act as resistance at a retest. So I do think that if for some reason you were looking for a reversal, down there, that was a nice trade. But I think that getting closer to 128.50 should bring some reaction from the market. I don't know if it's going to be short-term or a longer one, but I would definitely be monitoring this area. I think that if we see some type of a reversal, continuing lower is extremely likely to happen. Now, USD Swiss, I know that Blake showed it, but I just want to add one tiny thing here. Let me zoom out. I think that this 97, 70 area is a nice confluence of supports, because as you can see, three areas, three actually technical events happen here. There we have the 200 DMA coinciding with a horizontal support resistance area, also with this broken descending trend line support. So I would be watching that area carefully. I think that it might bring some kind of reaction, but definitely the fact that we broke lower from there is a technical event. We were looking for either a break higher or lower from this triangle. We got the break lower, so that means that this corrective move has more to run. But as I said, 97.50, quite an important area. Don't dismiss it. Shorting down there, or the closer we get to that, might prove to be a bad idea. Now, let's go to pound yen, and then I'm going to go over Aussie yen and Kiwi yen. So pound yen. There we go. So we tagged the next area of support here, the 50% fib. As you can see, this was the situation here. Big corrective formation higher. Let me zoom out so you can see it. Big corrective move higher. We broke below it. I mean, pound yen has been acting very technically. So big break lower, then an ABC corrective move higher. Both times respecting the broken trend line support as resistance. So both of the times that we retested this, we got rejected from there. Then breaking down from the parallel of this trend line and accelerating lower, finally finding support of the 50% fib and seeing some reaction. Needless to say that I remain quite bearish the pound yen. I think that any move back towards 144.50 might be a great shorting opportunity. Since, as I said, the pound yen has been acting very technically, I have no reason to believe that this strong area of support is not going to act as resistance if we even make it up there to retest it, right? So pound yen is rebounding, nothing moves in a straight line, but watch carefully for a reaction from 144.50. Now, Aussie yen and Kiwi yen, I have to admit, are a little bit more complicated than the euro and the pound yen have been. So I need to zoom out here so you can see the big picture again. Now, let me tell you what I like and what I don't like for the bear scenario having to do with Aussie yen. So Aussie yen, exactly as we saw the pound yen, a big corrective formation. This is a pennant, actually like a big pennant. We're breaking lower. We're creating a consolidation like in a channel. We seem to be breaking lower below this channel, but actually reversing once again. Now, slipping back in the channel and retesting a horizontal support area as resistance at 81.30 or 81.40. Now, as long as we stay below there, having a bearish bias is absolutely fine. But if we do break above that and we start being in a choppy range once again, given the fact that we actually have seen a false break lower, I'm going to be a little bit worried. I mean, when I see signals that are, so mixed and, false starts, etc., I usually get quite worried that the market is trying to trap people in the wrong direction. And at the very least, I'm not interested to trade something because, okay, if it's not very easy to read, why should I trade that and not something else that is like, easier to read? So, that's my viewpoint in the Aussie yen, and having to do with the Kiwi yen, broken down below. I'm showing the big picture again before zooming in, broken down below this ascendant support. Now started moving lower, but I have to tell you one thing: the way in which we have been moving lower, as you see, this move to the downside is quite overlapping and slow. And I need to add here the fact that we have rebounded from a confluence of supports down here. So two fibs confluencing there, the 61.8 and the 78.6, and we're seeing a rebound exactly from that area and back again within this something like a descending triangle. It is a descending triangle actually. So one thing I have to say, in the short term, any move up to 74.40 can still be viewed as corrective. I mean, this is a previous area of support. It can act as a resistance. So sure, maintaining a bearish bias for now is the way to go. But on the other hand, this doesn't look that good to me. I mean, technically speaking, as I said, a lot of overlapping price action. Another as can be viewed as a false break lower, as we saw in the Aussie yen, it looks differently, but still a false break lower from this descending triangle. Bottom line, I wouldn't be short. I wouldn't be short. I would rather stay away from it. But showing it because we haven't seen it in some days doesn't mean that everything has a very clear viewpoint. Now, let me briefly show what I said before, because I know that Blake mentioned it, but I want to show exactly what I'm seeing and why I'm seeing it like that. Specifically, gold. Okay, Stelio, can you hear me fine?
I can, yes, you're fine. You have a little bit of lag every now and then, but overall you're just fine.
Okay, because I'm on a 4G router. Okay, so this is what I was showing before. I'm viewing this move lower in gold. You know, it is obviously a channeled move lower. We broke below a very important ascending trend line support. So what I'm looking for here is the following: we have, you know, an area of support that was holding price action for several days at around 12.06. I think that if we clear above that level, which is also going to mean that we actually made it above this channel, then I think that a push towards 1230 to 1237 is going to be 100% doable. Don't forget that we also have a morning star formation, which was a very, very potent reversal formation. I think it was last Wednesday that we started creating that after a capitulation move lower. You know, and the same situation applies with silver, although I have to say that, you know, gold looks somewhat better to me down here. I still have some delay in trading view. I didn't have it before. I don't know why that's the case. Let me see if I can refresh it. Sandy, do we have any questions, by the way?
We have only one so far, which is something that Blake covered, cable. It's our friend Michael asking if you can have a look at it.
What about it? Let me see, actually. Okay, let me have a short-term look of cable, because for some reason the page with daily charts just refuses to load for me. I mean, it was working fine for a long period of time, and
okay, no worries.
So, cable, we had a false break lower from that. No, actually, all the pages refuse. I mean, this one refuses to load. More price action as well. I don't understand why that's the case. Oh man, no, that's not helping.
I mean, it's okay if your connection is not very good. You know, I mean, our friend Michael can always go back because he got in late. He says he can always go back and see what in the recording. See what.
If you need me to cover the cable, I can.
Oh, we can see your Skype now.
Okay, that would be good. Like, because for some reason, trading view refuses to load for me.
Okay,
so if you can take over the screen on me trying to switch to another router to see if that's going to, you know, help.
Yeah. Okay. So I don't know who was asking the question, Stelios, but let's talk about the pound. So the pound is at it's breaking a major long-term downtrend line. Now this is an hourly basis, so you know you have to go way back to like the daily charts. And you can, or this is a 4-hour, but you can see we're poking our head above this this major downtrend line. So it's really make or break for the cable here, and the 129.30 level is the 38% retracement. Now that was the last time that we were making higher highs, higher lows, and then we stopped. So when we peaked back in July to the most recent low in August, we are at the 38% retracement. So the really key here for the cable is to really clear like 129.30, which we're only 10 pips away from right now. But you know, we break the previous support right here at 129.55 ish. That's going to really kick off a bigger squeeze. And both the euro and the pound are pushing up against really you know, key resistance. You got the euro at 116.30, you got the pound at 129.30, and both are you know, being sold right at these levels because you know the risk reward is to be short right now, right here, right now. But as you guys know, if we break, we're going to break, and it's going to break hard too, and especially you know following the reversals that we saw in the dollar index the last couple of days. You know, being long the dollar is tough. It's a tough trade.
Speaking of which, Blake, Sorry to interrupt. I'm not sure if I can take back the screen because my connection is still mediocre. But we have a huge evening star formation on the dollar index on the weekly chart, which is like a big reversal signal, right?
Yeah,
I mean,
we're only midweek, so a lot can still.
I know, but it's something to monitor, right?
Yes. Oh, yeah. Absolutely. Here, let me see if I can do it. I'm going to give you the end of data. There you go. End of day. This is the ICE data. And matter of fact, you say that's a evening star. That's a shooting star from what I see.
No, the next, the combination of those three candles.
Oh, the combination of the three. Yeah. I got it.
It's a very powerful evening star formation.
Right. And so, with that combination with the reversal candle from last week, I mean, if we close the week close the week on a weak note, the risk is for a lot lower levels in the dollar. And, with everything coming ahead, and, with everything coming ahead and with all this news regarding, the Trump administration, I don't know how excited people are going to be to necessarily own dollars going into the end of the week. Even if the FOMC minutes strike a hawkish tone. Now, the risk is also for today, speaking of the FOMC minutes, is if the dollar, if the Fed governors have more of a dovish outlook, as we move forward, as we probably are nearing the end of this rate hike cycle, getting the Fed back to where they feel neutral. If we feel that the Fed is getting close to slowing down, raising rates, that could be a huge negative for the dollar.
And Blake,
yes.
Sorry to interrupt.
No,
you saw Kaplan. Which one is it? Dallas Fed president, one of the Fed presidents. He did mention exactly that yesterday. He said that maybe 3 or 4 more hikes, and we are at the terminal rate for this
cycle.
Yeah. So they're starting to talk about that.
It wasn't just him. There was another Fed governor that echoed the same sentiment. I can't remember who it was exactly, but let's say that those end up being more of the hawks of the group, and then everybody goes, whoa, those were the most hawkish views. What are the doves saying? And so anyway, yeah, I think the dollar is at risk here. And then, you compound that with all the political turmoil that's happening here in the U.S. this week. The dollar is very vulnerable at this moment. And boy, does that mean that, we're past Brexit and we're past Italy? No, it doesn't. But the market's positioned for those events right now. They're positioned for an Italian crisis. They're positioned for a Brexit crisis. So, if some of those positions need to unwind, they could, and that's where the euro could end up being 120, and the pound could end up being 132 without much of an issue. Add
to that, Blake, what I had been saying about the ECB, that in my opinion, by the ECB predicting that it's going to stay put for another full year, assuming, of course, that there is no a global recession or whatever, in which case, anyhow, all the central banks are going to be reversing course. But assuming that nothing like that happens, which then affects everybody, the risks, if ECB doesn't follow the plan, is that it's going to follow a more hawkish plan, and definitely not a more dovish one, right? So there are also some dangers from there.
Sure, absolutely. So, hey guys, watch the cable. We are really a few pips from breaking out here, and it's probably going to happen as the hour starts here. Look, the pound is about ready to go. Here we go. Here goes the 1 minute chart. They're filling it. They're going to start filling everything. from here to 129.50.
I think that one way or another, the pound is going to make it to 130 quite soon. I mean, 130, in my opinion, is going to act like a magnet level. Previous area of support as well, psychological level. A lot of stop losses there.
Yep, I agree. And, you know, we're trying to make our way up there right now. Remember, this is a 38% retracement. Just remember, we've cleared this big downtrend line too. So, so it's key. And gold's holding up. The euro, I think, is the last thing here that really needs to we clear 116.30, and that really frees up the cable to move. So with that being said, guys, I'm gonna wish you all a wonderful day. I thank you all for all the amazing birthday wishes, and look forward to introducing a new family member into our family today as my sister gives birth. So this is all very exciting day for me, and I hope I don't fall asleep at the wheel a little bit later today. So Stelios, Steve, thank you guys for your efforts for being here today. I know Stelios, you haven't had power because you live in Venezuela now, and Steve, you're in Porto Heli right now, which is the most beautiful
and by the way, Blake,
and yes.
By the way, Blake, you can pass me the screen. My connection seems to be okay now. I can try to show some of the crosses before you know, I wrap it up. And you know, if it doesn't work, fine. Stelios will just say bye to everybody and wrap it up. But I think it's okay for another 5 minutes.
We have 2 questions if you want, Steve.
All right, guys, I got to bow out. So
see you later. So if you want, we have 2 questions, and then we can
absolutely. You give them to me once I show this. I promised yesterday that I'm going to show the euro and pound crosses as well. Euros is what I'm watching simply because I was viewing this move lower as corrective. I very specifically mentioned that this 155.80 area is quite an important area because, you know, we had that trend line confluencing with the 50% fib and also with this horizontal support area. We're seeing a very nice bounce from there. I'm now monitoring this descending trend line as resistance. I think that if we clear that, and especially if we clear 159, we're definitely going to be seeing an extension higher. Notice, please, also the RSI, which had a very corrective structure. Just look at it. I mean, we pulled back softly towards the 40 area, and now we're breaking higher there as well. So I think that the euros looks quite nice as a potential breakout higher. And now we have the euro kiwi. Euro kiwi is basically trapped because, you know, there are two areas here. One, we had that, you know, trend line resistance. Look how many times the market has respected it. That's what got us rejected from there. But on the other hand, you know, we still had this quite impressive move higher. We then had a consolidation within a flag. We broke out, we came down, we retested this flag. We are holding quite nicely. So Euro Kiwi doesn't look that shabby either. I think that if we clear on a daily closing basis, this 174.30 area, looking for a, you know, for a move towards the 161.8% extension of the last big move lower, that's at 177.40, is not actually a bad idea. But we definitely need to first see a daily close above 174.30. And let me also have a look at the equivalent pound crosses before you give me the questions. My connection seems to be working nicely now, so we can definitely cover that. Okay, so quite a nice move lower, right, from the highs, triangle, break low, you know, a break lower, and now we seem to be moving higher again. But as long as we remain below this triangle, I think that another rejection and one more leg lower, perhaps towards 171, looks quite likely. So I think that there is the potential, you know, for at least one more leg low, higher initially, like towards 177, 177.50. But I wouldn't be surprised if that actually got rejected, so we can get another leg to the downside towards 171. And let me also specify here that if I zoom out, you can also see that potentially we have like a big head and shoulders formation here, right? So there is the potential that we're going to see a lot more downside, but one step at a time, as I said. Let's first see if this extension higher is going to fail, which I think it will, and then we can start talking about possible areas of support. Obviously, 174 will remain very critical to the market, but if we do clear this 174 area, then we can be talking for larger targets, 171 initially, and quite lower. We have other targets like 167, etc. So Stelio, pound kiwi, and then you give me the questions. So pound kiwi, here it is. Pound kiwi in the middle of a symmetrical triangle. So far, nothing to do, nothing to see here. But I do believe that once we clear the symmetrical triangle, we're going to see a big extension. So either lower or higher. I'm watching this, and I think this is going to be a nice trading opportunity. In the short term, and for my trading style, I'm not looking to do anything because, as I said, we're exactly in the middle of this symmetrical triangle. Go ahead, Stelio. Give me the questions, please.
Sure. So, okay, DXY we covered, cable, euro, dollar we covered. Okay, we have treasuries, and our friend Dave is asking about palladium.
Palladium. Okay, let me start.
So treasuries and palladium. Yeah.
Okay, let me have a fast look at palladium first, and then we're going to go to treasuries and actually the bonds. Since we're going to cover the treasuries, let's also have a look at the bonds. So here is palladium. As I was saying the other day, I think that among the rest of the metals, palladium looked better than the rest, simply because of the type of the reversal that we had. It was a very V-shaped recovery, and plus, keep in mind that this whole corrective move to the downside can simply be, there are a lot of structures that they can see here from an Elliott wave perspective as well. It can be a double zigzag, like an ABC. But regardless, what matters is this move lower, especially if you zoom out and you look at the big picture, does not look impulsive in comparison to what kind of a move higher we had. Like, look at the move higher and look at the nature of the move lower. So I think that palladium, as long as it holds this 833 low that we saw, it looks decently good. I mean, we said the other day that if it gets rejected once again from this 910 level, it might extend lower once again, but it hasn't. So, I think it might try to attack this broken trend line support as resistance once again. So, in general, it doesn't look that bad. I think it looks decently constructive. Of course, you still need to be careful because corrective moves can be quite complex on occasion, especially after such a prolonged uptrend like the one we had. So it's not very easy to to call with certainty the bottom just a few days after you found a low, because only in retrospect you can be sure that that was a low. But as I said, it looks fairly constructive, and pullbacks. If we see some initial pullbacks getting some nice bids, that's going to be an extra sign pointing to the upside. Now,
Steve, Andre just sent a message saying that palladium is at the 38% on the weekly chart. Just his comment. Yeah.
Okay. Yeah. That's. So a nice area as well for a rebound. From that perspective, correct. So, listen, I was viewing this as many different things, but the way it has been behaving lately, I'm even watching this as a possible diamond reversal formation, right, in the treasuries. You can see it here marked with the blue intermittent lines. One thing is for sure, at the very least, this might be an A, B, C, right? So this potential for a move higher towards 122, which is the 38.2, or a little bit higher, roughly 122.50, which is a horizontal support resistance area, looks likely. And if we switch to the yields, actually, which are inversely correlated, what do you see here, Stelio? Yields are actually now testing neckline support of a head and shoulder formation. Yeah. So, I would be quite careful here because the yield chart looks, quite more clear than the bond chart itself. But just look at it. I mean,
And that would be,
in my opinion, below 280.
Sorry, go on.
Yeah. A daily close below 280 in the yields, in the 10-year yield, I think that's going to be opening quite a lot of downside, right? So I would be cautious here. Now, having to do with the bunds, let's switch the bunds. No surprise here, once again, and this is important, so let me show it on the weekly chart first, so then you can see, you can see it from a closer look. So, bunds weekly, just look at it. Another retest of this corrective, most probably formations resistance. So it's not a surprise. Now I'm going to go back to the daily. It's not a surprise that the market has a lot of trouble clearing through this level, right? So let me be very clear. I think that if we do close, especially on a weekly basis, above 164, that's going to be a major bullish breakout. But until we do that, buying right on such a critical resistance makes no sense, right? So it has the potential of producing, fairly soon, a very bullish breakout. But until that happens, don't buy it on such strong resistance. I mean, it's quite dangerous, right? It makes more sense, even if you believe it's going to move higher, to sell it because you have a very tight risk and you know where you're wrong, than trying to buy and hoping that this is going to be the time that actually it punches through this resistance, and that will obviously create some nice big extension to the upside. So that's what I think about the treasuries and the bulls. Stelio, do we have any other questions before we call it a day?
We have one last one relating to euro-dollar. Our friend Russell is actually asking, we have resistance at, like Blake said, 116.3, 116.5. How much higher would it go if that breaks? And
okay, let me show you what I see. Let me show you what I see. There we go. So this is what I see. Okay, I had a triangle here. And by the way, for those of you that are watching the webinar, I have not touched those trend lines in since before I left for my previous vacation. You remember, Stelio, I was mentioning that the areas of support I'm looking for are 114.50 and 113. We actually tagged this 113 area to the pip because that was the reason I was looking for 113, and I had shown that multiple times, is because 113 was the area that this broken long-term descending channel that was containing price action from the beginning of 2015 until we finally broke out in July 2017. So roughly for 2.5 years we were contained by this descending channel, and the extension of this channel's resistance was passing through the 113 level. Plus the fact that usually triangles are fourth waves, which means that after a triangle, you expect a terminal thrust lower or higher if you find that an uptrend before seeing at least a corrective move to the upside. So we made it perfectly at 113. We're rebounding. I have to admit that we're rebounding with quite a lot more force than I would initially expect, but it's not surprising given the one-sided positioning and sentiment that we had in dollar. Now, where I would be looking for a resistance, I have a confluence of resistances here at 116.50 as well. Why? Because this is the previous triangle support trend line coming in as a resistance, and also the 78.6 from the move lower that started from that high at the end of the triangle. And if we actually do break above that, we reopen the 118.30 to 118.50 area, which is quite an important support resistance area. So I do think that after that, we should be looking for a move towards 118.30 at the very least. So that's what I think.
Okay, I think that's great, and I think that's fine for now, for today. We can, oh, sorry, pardon my daughters. Yeah,
no problem. For me, by the way, of course, nothing moves in a straight line, so it wouldn't surprise me to see something like this, right? So if I make an assumption of what would happen, let's say, this is something I would be looking for, like something like this, right? Just mentioning it.
Cool. Okay. Well, thank you very much, Steve, for being here from on your holidays, and it was very good, I think. Awesome.
I'll see you later. I'm going to be joining also the chat room. If Blake has to go, I'm going to have to leave the family today, to make sure that we cover everything that happens. So if Blake has to go for his sister's, giving birth, labor, depends on what it happens. I'm going to be in the chat room, etc. Anyhow, I've missed everybody there. So thank you very much, and we'll be here tomorrow as well.
Thank you, Steve.
Thank you, Steve.
That was great. Thanks, man.